Welcome to my channel, good people. I have very interesting news for you today. IBM is proposing a stock split. Yes, you heard me right. And most likely a 2-to-1 split soon. I mean before the end of 2021. Or at most at the end of 2021. This is a bold step by IBM management. Question is, why? And what are the benefits and say the downside of this strategy for both IBM and investors? And if you do not have IBM shares in your portfolio, you should listen to this presentation. Perhaps you will buy IBM shares because of the split. Grab a cuppa, of course I mean a cup of tea, and then subscribe. You see, IBM, known as International Business Machine Corporation, has a long history dated back to say 1911 when it was founded in the Endcourt, New York, in the USA. Initially, the company IBM started as a computing tabulating recording company and then was renamed International Business Machine in 1924. IBM is incorporated in New York. Well, you see, I got to know about IBM a few years back when I qualified as a Microsoft system engineer. Okay, stay tuned. Let me tell you about the union between Microsoft and IBM. You see, according to my findings, in 1980, Microsoft formed a partnership with IBM to embed, if you like, to bundle Microsoft operating system with IBM computers. With that deal, IBM paid Microsoft a royalty for every sale. Then Microsoft was still at the fledgling stage. At the beginning. So you could say IBM in a way promoted Microsoft. Or you could say it's a win-win for both companies. Moving on, let us talk about the stock split. Okay, why would a company initiate a stock split? Stay tuned. Let me tell you. You see, stock split is a business or corporate decision and action to divide its existing shares into multiple shares to boost the liquidity of the shares and to increase the numbers of outstanding shares, meaning more shares for prospective investors to buy. So, what is the effect of the split? Well, the numbers of shares owned by shareholders will increase. However, the total value of shares remain the same because the split does not add any additional dollar amount to the stock. And I strongly recommend you watch the 2 videos on Tesla and Apple stock split. You will see the clip at the end of this video. That said, you see, IBM is set to split into 2 to form 2 publicly traded entities, with one focusing on the delivery of hybrid cloud services enterprises and the other specializing in the delivery of managed infrastructure services. And let's say you are curious and want to know the implication of this strategy. Okay, well, you see, according to IBM management, claim the measure would help, quote, accelerate its hybrid cloud growth strategy, end quote, while also serving to drive up the value these separate entities can deliver to their clients and shareholders overall. Okay, wait, let me break it down further. You see, the IT world is evolving. Consequently, there is a paradigm shift in the use and the application of technology. Therefore, according to IBM, and I quote, clients having needs for application and infrastructure services are diverging, while adoption of our hybrid cloud platform is accelerating, end quote. And if you ask about my opinion, I say this strategy would enable IBM to divest its slow growth IT services and focus on its focus on its high growth hybrid cloud and AI businesses. Okay. Meanwhile, remember I said a few minutes ago that there's always a motive behind any stock split vis-a-vis the benefit. Okay. Stay with me. Let me tell you about what you need to know about the split or spin-off, if you like. Stay with me. I mean about the restructuring of IBM. You see, according to a report, the company has generated, bear with me, IBM has generated, say, 59 billion in revenue in the 12 months up to June 30th. And to remind you, IBM is now divided into two, as I mentioned earlier. Meanwhile, the spun-off company will be temporarily called quote-unquote NewCo, which include businesses that generated, say, 19 billion in revenue in the 12 months leading to 30th of June. And it's going to be the world's leading managed infrastructure services with over 4,600 customers in 115 countries, including more than 75% of the Fortune 100. Meanwhile, I am surprised myself, this is very interesting, to hear that IBM debt is manageable. You see where I'm coming from? Given various financial reports about the company in the past, I haven't read so much about the company. I am really surprised. I would say impressed. Okay, if you'd like to know, according to the report, the total debt remains manageable even after its 34 billion takeover. What's that word? Takeover of Red Hat. That's another company. Though Moody's and S&P slightly reduced its credit rating, IBM ended the second half of 2020 with 64.7 billion in total debt, just down by 11% from a year earlier. And it generated free cash flow. Listen to that. Free cash flow of 11.5 billion over the previous 12 months. And if you like to know what is responsible for the recent IBM performance, well, it is likely due to the strong performance from Red Hat, the new company. The company noted, IBM noted that this recent spin-off of its managed infrastructure services business will help IBM to focus on its open hybrid platform and AI capabilities. Okay, let us talk about IBM dividend payment and the implication of the 2-to-1 stock split. Okay, IBM became a dividend aristocrat of the S&P 500 earlier this year, 2021, after raising its dividend for the 25th straight year. But the split will end IBM brief stint in that elite group, since the two companies will only pay a combined quarterly dividend that is no less than IBM current dividend, which nets a forward yield of 5.1%. In short, investors will need to keep their shares of both companies after the split to receive a comparable yield, while those who said the slower growth NewCo, listen to that, who could receive lower dividend. However, IBM plan to complete the spin-off by the end of 2021. Okay? But it's still unclear how many shares of NewCo each investor will receive. Okay, moving on. Stay with me. Let me tell you how the split will work. Alright, let's look at the IBM present shares during the production of this video. The price is at $128.90. And let's say IBM initiate the 2-to-1 split. Let's say they initiate the 2-to-1 split. So divide 128.90 by 2. That gives us $64.45. And let's say you own one share. You will now have 2 shares. One for the delivery of hybrid cloud services to enterprise, and the second one will be the NewCo company at $64 $1.45 each respectively. Okay, here's what I will suggest. You should start the dollar cost averaging and buy the IBM shares before the end of the year and benefit from the split. Or what is your opinion? Please leave your comment in the comment section. Okay, here comes the best part. Subscribe. Remember, our target is 500 subscribers. Okay? And then, remember the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.